You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday. It is time to view some volatility. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the Options Insider Radio Network. Reminding you, make sure you're checking out the full network wherever you find your favorite podcast, Spotify, iTunes. We don't judge. A lot of you coming in on the tubes these days. You shall find us and all the goodness that lies therein and has been coming now for 19 plus years. If you want to join us after this show for Options Oddities, where we go deep into a whole bunch of weird and wild trades, and a lot of them have been bangers of late, of course. Great pro Q&As like with some jerk guy named Dr. VIX, where we went deep into his research on should you or should you not follow unusual activity / block trading. Well, if you want to go deep into that, theoptionsinsider.com/pro. Congrats to Ghost Hunter, one of our newer pro members who won the May Pro Trading Crate. Get your name in the hat to win June. I do believe we have maybe one more of Dan's books left, which has both myself and Russell on the back cover. I do believe I am above him, so at least the universe is correct in that regard. If you want to get your hands on that and all the other cool stuff that goes into those pro trading crates, theoptionsinsider.com/pro is the place to go. And since I have maligned him thrice already and the show has barely begun, let us now welcome on the super sleepy. Let's see if we can wake him up with some spicy vol action, listeners. The super sleepy Dr. VIX himself, a.k.a. Mr. Russell Rhoads, now hanging out in Indiana, the home of the Bears, the Hammond Bears. You that this morning?
I did see that this morning. I'm pretty excited about that.
Spoken like a true Hoosier.
Yeah, no, I'm pretty excited about that for other reasons. I think people need to take a look at Illinois and Chicago and the poor governance, and maybe this will wake some people up. That's all and this show is not about politics at all.
Let's do the rest of the hour about local Illinois and Chicago politics. That'll
drive everybody absolutely nuts.
A lot of people in.
Like you said, I'm sleepy and I woke up from a freaking nap. And WTF, guys? I took a 30-minute nap. That's all it took for VIX to go up by like 2.5 points.
You've been speaking it into fruition for months now. You've been railing. The headline has been "Old Man Yells at Cloud," and finally the cloud has listened. Let's get there, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is lighting up our tape this week from a vol trading and trending and analysis and unusual activity perspectives. And, we've been talking about it for a while. I think it's fair to say I've been fairly skeptical of this massive rally, but Dr. VIX, he's been living that life. He walks the streets with his "Sold to You" shirts. When one of his kids in his class says, Mr. Dr. VIX, I'm thinking about buying this market, he just smacks them right in the face. He has been an aggressive an aggressive bear, an aggressive anti-cheerleader of this market. All the cheerleading you're getting on CNBC, Dr. VIX just throws it right back in their face. He says no to you. And you know what? We got a little bit of the red on the screen last week. Coming in and started this week, it seemed like we might trend that way again. And then, of course, the bulls started doing their thing. Uncle Mike and his cabal started buying with both hands. And we started seeing green again on the screen. In fact, we even saw a sell-off turn into a rally again this week. We haven't seen that play out once or twice post-2020. And then coming into today, maybe just a conglomeration of many things hitting the fan. Of course, we had non-farms this morning. And it was actually a surprisingly robust number. That maybe in and of itself, maybe we're in the good news is bad news camp again, because that means the Fed probably not going to do the rate cut dance that some folks were still holding out hope for against all other evidence to the contrary. Also, some lingering concerns on the unemployment side and long-term unemployment side, which might have spooked some folks. Or maybe just folks getting maybe a little bit dubious of these crazy valuations, or just more sellers than buyers. Whatever the case, listeners, we started selling off today, and usually what happens is we get to the start of the show and the bulls have already started buying the dip, and by the time we start the show, maybe a few minutes into it, we're already green. Instead, it's the opposite. All of Russell's devotees out there have continued hitting the bid. They've gone around, found every bull they could find and put a bullet in their head, because we're continuing the downside, listeners, off 1 3/4% in the S&P. I can't remember the last time we've come in to start the show and we've been off this much, basically since the start of the conflict in Iran. And before that, you got to go back probably to the Liberation Day sell-off of last year. So it's been a little bit. The Dow, after apparently finding its footing yesterday, everyone's talking about the great rotation out of the S&P into the Dow coming alive for the first time, getting clipped as well, off 0.75%. And the Nasdaq, my God, Russell, what have you done to the Nasdaq, sir? Off nearly 3%, 2.9%. Russell has single-handedly assassinated all of the major indices, which means we're finally getting some vol, some spice back on the vol screen this week, listeners. VIX cash, when we kicked off the show, at a 19. Kissing a 20 handle. We were just talking on the show a few weeks ago. Man, we haven't kissed a 20 handle in forever. We might get there today. We might be there right now. I haven't reacted in a few minutes. Up 3 3/4 points from where we were this time last week. Takes a lot to lift vol this time of year. All the seasonality, everything else weighing against it. And here we are up nearly 4 points. Volley, the Just the Facts, ma'am edition, 1535, up almost 2.5, about 2.4 points. And if you're wondering why there's discrepancy there, of course, volley, Just the Facts, straight at the money vol. VIX obviously has other moving parts to it, skew most notably out there. And then VVIX at a 96, gaining back a whole 10 points this week. So we got some spice on the table. This is the worst sell-off since the beginning of the conflict in Iran, obviously. The worst day for chip stocks so far this year. So a lot of blood. Mr. Rhoads, sir, I will leave it to you now. The floor is yours. You have the remainder of the 48 minutes of the show to say, nana, nana, boo-boo, I told you so. Have at it.
Well, I do not feel like being 2.2% off of the S&P 500's all-time high allows me to...
A victory lap.
If I take, and actually, as you were talking, I was either going to say that or I was going to say, if I take a victory lap based on this, I should never be allowed on your program again.
That would be hilarious, though. That would be awesome. That's it. I win. I'm out. You're never going to hear from me again.
So, yeah, we're still only 2.2% off the all-time high. It just happened to. And literally, Mark was making a bit of fun of me, a little bit of fun of me. I had to get up early for something, and I took a little nap before the program, and I was trying to stop yawning. But literally, man, this thing really, the whole week just happened in the last half hour, I guess. One thing to keep in mind is, and I wonder if this is something that might be lurking a little bit over our markets. The ECB will raise rates next week. There's exactly a 100.3% chance that they're going to raise rates next week. And the reason it's more than 100% is there's a 0.3% that they made, do 2 quarter basis point hikes instead of one. And the U.S. market has adjusted to 1 hike by the December meeting now, which may be one of the things. Although the stock market has ignored the interest rate thing for some time. We did have an adjustment to where we weren't going to get any more cuts, and we continue to make all-time highs in the S&P 500. So I don't know how much that's being paid attention to.
They paid attention to the rates picture when it made sense for them, when they were pricing in a bunch of rate cuts for years, rallying off that. They priced that in. When the rate cuts went away, all of a sudden the interest rates didn't matter anymore. We're still going up.
That's right. Didn't make a difference at all. So I really don't know if you can attribute, the next move's going to be a hike, and it's pretty certain at this point. If that's what's weighing on the market, you continue to hear talk of the AI spending thing, maybe not being as aggressive as it has been. And something that we teach, I'm going to go academic on you here, and I want you guys to stick with me on this one because it's nuanced, but I feel like it's another thing that the market may have missed. When we teach corporate finance, which I teach the beginning corporate finance class for one of the programs at IU. We talk about what companies like to do if they're going to fund a new capital project or invest in the firm is actually how we're putting it, which means buying long-term assets. The biggest investing in firms that's been going on these days is AI. And typically firms, if you're a financially healthy firm, you pay for this out of your cash flow. And if you don't have enough cash flow, which AI is a big spend, you might issue more debt. Your third alternative is issuing shares. And, typically that's something that you don't want to do. And sometimes it's something that is done out of desperation. Well, freaking Alphabet's going to do it. They announced a secondary in the equity market and even said that the money is for AI.
That is wild because everyone else and their mother is buying back all their shares, right? It's been another thing that's been a pillar of this rally.
In Microsoft, Microsoft, for instance, if you look at I know I'm really getting into the corporate finance part of the stuff, but it is what ends up impacting the market. And if you look at, and I'm speaking slowly because I'm pulling up their earnings statement, believe it or not, we've probably never done that here, but their capital, the estimated capital expenditures for the 2027 year, and Microsoft is on a June year end, so they're going to spend $116 billion capital spending in the year that's ending June 30th. The last year they spent $97 billion. They're on track to spend $180 billion. And that is going to reduce their available free cash flow for anything else to $33 billion. They're almost spending all of their cash from operations in 2027 on capital build-out.
Space data centers don't come cheap, sir. I don't know what you heard.
No, they don't. But the impact that this should be, people should be adjusting their cash flow models and their valuation of these companies based on this excess capital spend, and I don't think they're doing it.
That would require basic understanding of corporate finance, and that has all gone out the window.
Yeah, nobody's paying attention to that stuff.
It is kind of wild you're talking about new stock issuances, because look at big names like Apple. They sold off to 170, and one of the big catalysts of their turnaround and bounce was, hey, we're on the bid, firm's on the bid, we're buying back our stock at this level, and bam, the stock has never looked back. It's nearly doubled from that level. That's so many names have done that. NVIDIA, all these names are talking about buybacks, and now here we have Alphabet going the other way, which again, kind of wild. You think that in and of itself would be would spook some people?
I thought it would, but it's all news is good news these days. In fact, they're looking at spending $240 billion on capital expenditures in 2027. That's up from $100 billion. That's up from $91 billion in 2025 and $186 billion this year. But that reduces their free cash flow to only $15 billion. That free cash flow is what they're using to buy back shares.
So they got nothing. They got nothing
so
left at the end of the day.
So Microsoft's going to have very little to attribute. They can announce a buyback, but they may not have announcing a buyback doesn't necessarily mean you're going to follow through with it. Just means that you're allocating some funds for it.
It would be kind of wild if in hindsight
CapEx is going to catch up.
If in hindsight it's this relatively decent non-farms number, which proved to be the straw that broke, because we've seen much more dire, much hotter inflation numbers coming out in the past. They did nothing but rally off that news. And here we have coming out with a fairly impressive, strong economy number for the most part. That's what potentially derails this whole thing. Or again, at the end of the day, more sellers than buyers. I think there's a lot mixed into this sell-off today, not just the non-farms, but I think everything you're talking about, everything we've been talking about, all the concerns that have been lurking out there, all kind of manifesting themselves. And again, as you said, we are making a mountain out of this. It is still about 2% off all-time high. So we'll come back when it's at least 10%, and then Russell can wag his finger and say, I told you so. Hell, we were 6,300 not that long ago on the S&P, Mr. Rhoads, and looking to break it in the wrong direction. So they're getting all excited, all bent out of shape about breaking 50 handles or so below 7,500 again is kind of silly, but it does make for a fun show. At the end of the day, listeners, is the volume out there making for a fun show? Let's find out. But before we get there, let's dive into the uber sexy world of the vol term structure, listeners. This is another reason why it's a challenge sometimes to prep for this show, because as you can imagine, on a day like today, the front portion of the futures curve is a bit of a moving target. So we're just going to stick a pin in it right now. And then where it is 5 minutes from now, where it is when you're actually listening to this show later on today or some other time in the future, who knows? But to right now, listeners, we can only work with what we got. And right now we got perhaps not as much upside as you might expect. We got the June future at right around 18 3/4 right now, with the cash a little bit north of 19. So the cash obviously at a premium to that front future. That June future, again, 18 3/4 puts it up almost 1 1/4 points from where it was last week. Again, higher, but perhaps not quite as lofty as you might think. The July future kind of barely getting out of bed, only up about 0.5 point right now, hanging out right around 20.45. And October, everyone's watching the midterms. October, right around 22.5. That puts it up about 1/3 of a point. So this isn't really so far a ripple that's really carrying out through the rest of the term structure. You go all the way out to February of next year, we're at exactly 22 3/4. So that gives us exactly a 4-point slope between June and February of next year, listeners. So interesting stuff. You might expect that front portion of that curve to get a little bit juicier, a little bit more backward. It might even be as we speak. Let me go re-rack it right now while Mr. Dr. VIX gives us his thoughts. What are your thoughts, sir, on what we're seeing in the VIX term structure right now?
I think we were inverted a few minutes ago, but now we're at a fairly normal, it's looking fairly normal and fairly concerning going into the fall, which it's maintained a bit of elevated status out in September, October, and November, regardless of what's been happening on the shorter end. So I guess that's not overly shocking. Deviating to our friends across the pond. Again, I promise I won't every time I talk about them raising rates next week over there. But what we do have is maybe a spread opportunity between V stocks and VIX. The front month V stocks is at 2030 with spot at 18.5. I've got basically spot VIX at around 1870 and the June VIX future at 1880. So I really think there's a great shot if you trade them against each other to maybe short the June Euro stock or V stocks and go long June VIX. I think I know that it's elevated in front of the ECB announcement next week. And I'm talking about the V stocks one. Once we get that announcement behind us. If the world starts to take it very negatively, I bet you the VIX future would catch up. If it's the news is behind us, the VSTOXX future would probably come down and get closer to where that June VIX futures contract is. So just a thought. Also, the U.S. version of the ECB meeting is the following week. So VIX may actually start to creep a little higher going into the Fed meeting. So I think there's a great spread opportunity between the two of them. And I've been droning on forever about October versus November. They're still just right there in line with each other. Eventually, they will break.
I was just going to ask you, I'm assuming you haven't done anything, but it sounds like that is the case. You have not yet exited your Uber.
Oh, no. I mean, that
trade.
might be there. That might be there for 3 months. I know if I don't mention it 1 week, somebody's going to go, did you get out of it? No, I'm just sitting there with it. But
that reminds me of when Uncle Mike came on this network like a decade ago and said, I have this craziest trade ever. It's a 2-year collar in silver. It's going to give us so much content for the show. It's going to be the most exciting thing ever. Then it did nothing for 2 years. Now, if you had that on over the past, let's say 6 months, would have been a banger. But alas, no, out there, listeners. We're sitting there looking at Russell's Ocnove. That's what it was, Ocnove, right?
Yeah. Short October, long November. And they have been, I mean, they're both 22.45 by 22.50 right now. And I think at one point the October contract got to a nickel discount. But I got into them at even, and it's just where it's been.
Just to derail us again really quickly, I do see in our live chat, they are debating what we were talking about earlier in the show about the Bears leaving. And even though I thought it's official, our chat saying they don't believe it's still, they think they're still playing the Chicago game. The Bears aren't going anywhere. They know the next elections are in Chicago. Also, our chat bringing up Mr. Unlimited, 68% chance only on Polymarket right now that the Bears leave. And it's fairly liquid, about 6,000 in volume trading so far, I guess, today. So I guess it's still not a done deal, according to Polymarket, sir. So, and they speak the truth, don't you know, Mr. Rhoads?
I know they speak the truth, but so it took 3 days for the government in Hammond and the state government in Indiana to put together a package for the Bears. They've been trying to do it for 3 or 4 years in Illinois.
They certainly seem to be able to get things done a little faster in Indiana.
Who would you want to work with at this point?
Of course, having driven through Hammond recently, I don't know if I want to do anything in Hammond. Maybe that's obviously I can see why they're so giddy to bring something there, because there is literally nothing there but a giant refinery. But outside of that, I digress, listeners. Stay tuned after the show for our local Illinois versus Indiana sports / politics show. But Mr. Rhoads, it does seem like the vol market is kind of waking up today. Even coming into the start of the show, VIX options were active, but they weren't really lighting the world on fire. That has changed since we started the show. They've added fully 300,000 contracts since we started talking. So things are starting to get spicy out there. We were at a little north of 400,000 starting the show. 713 right now, so threatening that ADV. So things are starting to wake up out there, like the Dr. VIX. He's waking up for the show here, listeners. That ADV 746 right now, so right at that 750,000 contract threshold, up 31,000 contracts from this time last week. I got a feeling if today's flow keeps up, going to probably be lifting that number again. That's a respectable number for the start of summer, listeners. So we'll keep an eye on that. As I've said many times, if we start threatening 1 million contracts a day in VIX, that's when you really got to sit up and pay attention. Things are cooking. We're not quite there yet, but nearly 750,000 contracts heading into the start of summer. That is a reasonable ADV, all things considered. Now, what about our top 10? Is that reasonable out there? Well, we're still hanging out 9-to-1 calls over puts. Again, some of that is structural. If we're still hanging out at these levels this time a week from now, high teens, maybe even low 20s, dare I say it, we breach a 20 handle, God forbid, in VIX, then we might see some structural shift to this top 10, but we're not seeing it this week. And number 10, it costs you 165,000 contracts to break into the top 10 in VIX right now, which is actually kind of light. That gets you to our first and only put. So the first put right there, $165 of the June 18 puts. We've been debating for a while. What is the new 15 put? Maybe it's the June 18 put, listeners. Either way, that's the only put you're going to get today, so enjoy it. Number 9, $173 of the June 22s. So, we were just saying not that long ago, kind of hard to breach the 20 handle, but maybe you like a 22. Number 9, $173. Number 8, maybe you really like some upside, $176 of the June 65s. We love those, usually part of some ratio, some other vertical, listeners, but they're fun strikes nonetheless. Number 7. $1.84 of the OCK 50s. Number 3, maybe you want a little bit farther out and a little bit more upside. How about $1.87 of the July 25s? This has gone up against 189,000 of the July 45. So somebody's liking that 20 handle vertical out there in July land. Maybe you like it too, listeners. Number 4, 202,000 of the the AUG 35. So kind of splitting the uprights between the 25s and the 45s there. Number 3, 253 of the June 25s. Number 2, 258,000 of the July 65s. And the big dog on the docket, actually literally splitting the uprights between that July 25-45 vertical, is 305,000 of the July 35s. I'll have to go look and see if that is a giant fly or not. But nonetheless, 305,000 of the July 35s is your huckleberry for this week. But you know who's always your huckleberry every day of the week, listeners? It's Russell and his weekly rundown. Let's get there now.
Now, Russell's weekly rundown. Now, Russell's weekly rundown.
All right, Mr. Rhoads, the floor is yours, sir. What you got for us this week?
It was a funny week. We had Tuesday expiration, so not a whole lot being played into the June 2nd expiration on Monday. Also, going through Monday, Tuesday, and Wednesday, there was not a single spread trade using over 100 contracts using VIX weeklies. So really kind of a quiet week. And Monday, we had somebody buy 1,500 of the June 10th 24 calls for 20 cents. I was trying to lumber around and pull and just see how these things are looking right now, because a lot of these are long call trades, and just trying to do multiple screens at once and sound eloquent. It's just not happening. This one. So with VIX at 16, somebody bought 1,500 of the June 5th, 10th, 24 calls for 20 cents. They can sell them for 23 cents right now. Just letting you know that somebody's playing it, got the direction, everything else right. It doesn't really look good for them. On Tuesday, somebody with VIX between 16, 19, VIX around 1619. Somebody bought 1,000 of the June 10th 16 calls for between $1.31 and $1.40. The average price on that's $1.34. They can sell those for $2.79 right now. So that trade's looking really, really good. And then somebody on Wednesday with VIX at 1642 bought 1,400 of the June 10th 21 calls for 36 cents. They can sell those for 46 cents right now. It looks like, you're almost better off with kind of in the money calls as opposed to out of the money calls. It's like the vol crutches on them as they become closer to at the money, I guess.
I was going to say, it takes some cojones to go out there and buy 1,000 of anything in VIX right now, let alone the 16s expiring next week. So that paid off for that guy. Well done.
It paid off quite well, but somebody buying the 21s and the 24s with VIX at much lower levels. I typically, if I'm going to buy an option outright, my expectation is at minimum a double off of it. Just with time decay and everything else, I really want to have some pretty strong conviction. And only one of those three trades, even with the market probably doing what they were expecting, was working out for them. Let's see. On Thursday, with VIX at 16.15, somebody bought 100 of the July 8th 25 calls for $1.06 and sold the 45 calls for 30 cents. On that one, believe it or not, the July 8th 25 calls, their bid price is below what these people paid for them. And then
that's great.
Just letting you know. The 45s, the 45s, they cost more. It actually would cost a dime more to cover them right now.
I was going to say they probably bid up.
Yeah. Well, let's take a look at and I put this one in hoping that Andrew would show up today. With VIX at 15.55 on Thursday, somebody bought 270 of the June 24th 17 puts for 68 cents. I'm sure they don't feel very good about that trade right now.
Not loving those right now, yeah.
Nah, I could salvage it at 40 cents. And then finally today, early, somebody bought 800 of the June 10th 16 calls for $1.28. Yes, the ones that I talked about from Tuesday that somebody paid $1.31 to $1.44. Somebody paid a better price this morning for them. And again, they've got a bit better than a double on that. And then finally, I see somebody buying the June 10th 17 calls right on the offer side, paying a little over $2 for them. And I think that was a panic cover because I was seeing, naked call selling in small size over the course of the week. And I think somebody got caught short some 17 calls.
I could certainly see that out there. So yeah, anyone who's been buying calls in VIX the last few weeks has just been getting taken out to the woodshed. So I guess congrats to these folks that still have the courage of their convictions to buy 1,000 lot of anything that expires in a week, even a fairly meaty call like the 16s. This way we've been trending, we could easily have been hanging out in a mid 15 handle or below by the time those calls settled up. So interesting for them. Hopefully, if they're paying attention, maybe they at least monetize some of it. So they can let some of it ride, obviously. But given everything we've talked about on this show for a while now, sometimes the right move is to get the heck out of Dodge while the getting is good. People appear to be getting out of Dodge and just doing a whole bunch of stuff right now, Mr. Dr. VIX in VIXland, because even since you were talking, another 60,000 contracts have gone up in VIX. So it's a spicy day out there. 773,000 contracts on the tape in VIXland. We were barely at 400 when the show started, listeners. So things starting to heat up out there. What is the big dog out there? It's 72,000 of the June 25s. Looks like about 71,000 as well, the June 20s. So maybe we got a bit of a vertical going up out there. If it is a vertical, looks like it's for around 40, 41 cents, somewhere in that ballpark. There is size OI, obviously, on both strikes. So somebody could be getting the heck out of Dodge on something here, or they could be adding more. But that looks like that's our big boy today. And that's obviously about 143,000 contracts just in those two strikes right there. So that's giving us some of the juice. Then we fall off for number 3, about 40,000 of the June 18 puts. If you're wondering, all this rally going on, what's an 18 put going for right now? Still $1.05, so still got some life in those. Number 4, 36,000 of the June 22s. These are going, if you want to get in, if you like upside, in spite of everything we've said in the past on this show, if you want more upside, those are going for right around 50 cents right now. Number 5, 34,000 of the SEP 22 puts. We don't see a lot of this, Mr. Rhoads. What are your thoughts on the longer term? I know you started to grok towards more in the money puts when you want to short some VIX. What are your thoughts on going out to September and paying $3.35 for the privilege, sir?
I don't think that's a terrible idea if you think some normalcy is going to come back into the markets. If VIX settlement this past week was a little around 16. Let's just say you think 16, 17 is kind of a settlement area that you would expect. Paying $3 for those, they're going to be worth $5 at settlement. So I don't have a real problem with that trade based on normal VIX levels. Maybe somebody's wants to have a short volatility position going into the fall, and they're using this as the opportunity to get it.
Yeah, it's an interesting play. I mean, we've seen some crazy meaty in the money puts. This is certainly not that. It's more, I think if you're going to do this, dare I say it, it's a more reasonable way to go about it. Decent duration, decent but not onerous outlay. Kind of an interesting choice. Obviously, keep an eye on the term structure out there if you're going to do that play, but an intriguing one. Yesterday, 677,000 contracts on the tape. So hot option out there. We got the 22 puts going up exactly 50,000 times. I was just talking about the SEP 22 puts going up about almost 35,000 times today. What about the NOV 22 puts going up for $3.50? That was opening, again, 50,000 times, 100% of that going up on the bid. So paper potentially drawing a line in the sand all the way out to November for $3.50. That's an interesting choice. I'm not sure I'm not sure if I'm quite as down for that one as I was the other way. We were just talking. I see you shaking your head. Mr. Rhoads, do you concur with that one? Blasted away on those puts?
I'm going to agree with you on that for sure. Yeah.
Same strike.
That's a little bit, yeah, just a little too far. I think September makes a bit more sense. There's no, yeah, and I'm digging around just trying to see if that's because it looks like the open interest on those September contracts was already about 38,000. So I'm not sure. Maybe they're who knows what they're doing. I don't, you know.
It does make, if they did buy those SEP puts, look like a scoop compared to that Nove sale the day before. I mean, they traded for about the same price, and just kind of interesting what a difference a day makes out there, listeners. Number 2, 46,000 of the July 25s. Again, our old pal, the July 25-45 vertical, because 45,000 of the July 45 is going up as well for number 3. Number 4, 37,000 of the SEP 17 puts, 65 cents, if you're wondering. So we've been saying for a while here on the show, is the 17 the new 15 put? If you like these, at least you're getting some duration. Mr. Rhoads, I'll keep asking you on these because it's fun. What about a little bit more duration? 17 put, about 65 cents.
Oh yeah, well they haven't come down that much, but that's yeah. Didn't see a whole lot of short VIX trades going into next week's expiration when I went through the weeklies. So it just looks like not a whole ton of people think that in the near term that seems to be the way to go. Not overly surprising. Again, if you've been sitting on your hands and hoping for an opportunity to get some short volatility exposure, today's giving you somewhat of an opportunity, and bumping the contracts out in the fall to a 22 handle is giving you an opportunity on the options as well.
That it is, listeners. Let's keep going out to Wednesday, listeners. Nearly 900,000 contracts on the tape. 879. The big dog on Wednesday, about 55,000 of the June 18s. Right about $1.07 for those bad boys. Those were opening, so if they were buying them, looking a little bit better today, I would think. Number 2, 45,000 of the AUG 30s. Number 3, 45,000 as well of the June 21s. Number 4, 34,000 of the June 20s. And number 5, 31,000 of the June 17 half puts. If you liked those were for about $1 as well. Tuesday, 682 on the tape. The big dog, 75,000, pretty much exactly, of the AUK 50s, 5-0s. If you're wondering, what is a 50 call going for? It's about 95 cents, at least it was on Tuesday, listeners. So still fairly juicy. If you're wondering, that's about a 100 vol. So again, a lot of juice on these upside strikes still. Number 2, 33,000 of the June 23s. Number 3, 32,000 as well of the July 25s, our old pals. Number 4, 29,000 of the AUG 25s. And number 5, 25,000 of the AUK 24s. Kind of a funky one, 24, 50, 1x3 perhaps. We have seen ratios like that in the past, so good chance those are related there. I'll have to go do some digging on Tuesday to see. And Monday, 525 on the tape. The big dog, about 80,000 of the AUG 35s. If you're wondering, $1.12 for those bad boys. Number 2, 31,000 of the June 17 puts. Number 3, 24,000 of the July 25s. Once again, lighten up the tape. Number 4, 20,000 of the AUG 21s. Those are the only participants in our top 5 that were definitely opening. And number 5, about 20,000 as well of the AUG 21 puts. So perhaps we've got a straddle, maybe some conversion reversal action going on out there. And Mr. Rhoads, before we get out of VIX options, we do have the numbers from our friends over there at OCC on the options volume front. May I think, certified banger number, the busiest month in the history of the options business. Last month, April, 1.45 million contracts. This May, managing to beat that, 1.47, actually billion contracts out there. And even more interesting for us here on the show, Mr. Rhoads, what caught my eye, on top of a record-setting options volume number, contributing to that, we actually had growth again in our old pals, the VIX futures. They were up nearly 20%, about 19.5%, from about 3.5 million contracts to 4.1. So what are your thoughts on a new overall options market record, as well as the fact that the futures, folks are finally trading them again, sir?
Well, I think the options market record, I don't even know. I mean, we would call them weeklies. Are we calling them dailies on individual stocks? That's got to be helping. That's totally got to be helping. And the 0DTE continues to grow as well. So it's nice to see the VIX futures starting to catch a bid again. Some of that would come from the VIX option trading where the guys have to hedge themselves. But excess volatility in the market probably helps an awful lot as well. It's nice to see, that 1.4 billion. Somebody actually presented at one of the conferences I've been to, suggested that we might reach $1 billion in a day before you know it.
Okay, our chat just said a week or two ago that we're heading for a 1 billion contract week. I said that's coming, but it's a little bit down the road. $1 billion in a day.
They said with the 24-hour and all that other kind of stuff and all the different products.
Who said this? Who said this? I want this person's name.
I don't want to. It's Chatham House rules, man. It wasn't anybody on this network.
Demean them in my presence, sir. I want to know who they are. But it's maybe someday. I mean, if we get to 1 billion contracts a day, it's a great thing for the options market. Obviously, it's a great thing for everybody. But I mean, think about that. The entire industry used to do a little over 3 billion not that long ago. Listen, now you're talking about doing nearly a year's worth of flow in a day. Does that person, they must have just discovered options for the first time.
I think they were relatively new to the industry. Okay. I actually hesitated on even repeating
Did you stand up and say, I fundamentally object to you and to your, you can't handle the truth.
I did like that lawmaker a million years ago during the State of the Union and stood up and said, you lie.
That would have been good. I would have paid money to see that, and you could have tweeted it out on social media as they dragged you out of the conference, kicking and screaming.
They just started letting me go to conferences again. I can't screw.
Yeah, okay. Well, we won't spread that one, but I do want you to tell me after the show who that was. I am intrigued, so I can unfairly besmirch them. But yeah, listen, hey, I'm in the options biz at the end of the day, or a rising tide lifts all boats, 1 billion contracts a day. That translates into a lot of earlobes on my content. I'm not mad at that, but that's just a wild number, sir. Absolutely wild. When people first discover the product, sometimes they get a little hyperbolic. That's all I'm saying. All right, let's see if the rest of the Vol ETP universe is hyperbolic today, Mr. Doctor. And you know what? The volume numbers are going up. Interestingly enough, all of the ETPs are almost literally unchanged right now from where they were at the start of the show. Maybe up a couple of ticks in either direction or down. But that's really about it. SVIX was at about 2185 when we kicked off the show. And that's down about 0.6 of a point. And it's right around 2185 right now. Putting up some volume today, though, Mr. Doctor. So that is something to at least champion and cheerlead out here. 11,000 contracts. Tell you what, let's look really quickly. Let's see what are folks up to out here in SVIX today. And of course, as I say that, I love my buddy, the Flowmaster, and his platform, but it likes to log me out all the effing time, and it drives me crazy. All right, here we go. It's the 20 calls in SVIX going up nearly 1,000 times today. These are expiring on the 18th, and we also got about 1,000 of the 20 calls expiring on the 26th. So I'll have to look and see, is that just a weekly time spread out there? Is that just simpatico paper? Oh, yeah, June. Yeah, it is a spread. Okay, the June expiring on the 18th, 26th. 20 call spread for a dime, Mr. Doctor. Does that float your boat? Going up about 1,000 times.
Oh, I'd have to... I have no opinion on that one. I don't trade the options on the ETPs that very much.
That one I don't really love either.
Yeah, it's giving me a lukewarm feeling.
Plus, good luck getting out of that, like for all the reasons we talked about before. If volume shrinks up again next week, you're going to be, even if the spread goes your way, it's still challenging to execute.
I feel like I've already been critical of liquidity, and honestly, that was part of what I was just sitting here thinking is what happens if you get the move and you want to try and get out of it?
Yeah, you're going to get run over. It could go your way and you still get hurt on slippage at the end of the day. And then, Mr. Doctor, I did tell our chat at the start of the show, I already bought my UVIX. I bought it early in the day today. UVIX, $4, up right around 1/4 of a point or so, 0.2 of a point from where it was this time last week. Putting up some numbers, 82,000 contracts right now. The ADV is 46,000. That's down about 3,000 from this time last week. So, Mr. Doctor, inquiring minds want to know, what are you up to in the realm of all things UVIX? And also, if you've done anything in SVIX, by all means, let us know, sir.
No, I have not done anything in SVIX, and I put my UVIX trade on for the weekend and paid $3.98 for it. I did it while we've been talking. Since we're talking about UVIX, and we talk about options sometimes, looking at the trade alert screen, I actually saw somebody buy 100 of the UVIX 4 calls for 6 cents. I kind of like that idea. Who's to say we don't do a big old leg down going into the weekend? And I kind of like that idea. If they're covering a short, I really like it. But if they're speculating on it, I just kind of like that.
So as of right now, they're getting themselves some UVIX. So hopefully they're down for that on Monday's open. If past is prologue, it hasn't been the best trade, but maybe this is the weekend, sir. I've said that many times. I've learned to hold my tongue now on that. Maybe. But maybe this is the weekend, sir. Is all I'm saying. It's all I'm saying. A broken clock has to be right at least twice.
Don't tweet about it.
Yeah, I will not. I've learned my lesson. No more tweeting. No more.
I think you're trying to get me to take a victory lap over the market being down 2% to offset the attention of you tweeting that it looks all great, and then we wake up the next morning and it's all right at it.
I have maybe gotten in front of your profits a little bit on the UVIX trade, but I was just celebrating for you. I was excited for you, and perhaps for myself, because I maybe had some UVIX as well. Just saying out there. So yeah, UVIX $4 right now. So if you were hoping for the UVIX explosion, not quite there yet, but we'll see. Maybe we get that next leg. Maybe we get all this. The market has already proven that they don't really care about, what's going on in the Middle East. Maybe if something does happen over there, maybe that will contribute. But nonetheless, we're moving a little bit today. I've been getting some volume, which is interesting. UVXY 29 3/4, up about 1 1/4 points from last week, putting up about 51,000 contracts so far this week. The ADV is 30,000, so UVXY doing nearly 2x its ADV already, which is decently impressive. And our old pal VXX 24 3/4, up about 3/4 of a point. It had put up about 51,000 contracts. Let's just see. It's up about 59,000 contracts right now. The ADV is 42,000. That's unchanged. I got a feeling that's going to probably be ticking up out here. Let's just take a look really quickly. We haven't talked VXX that often on the show. Let's see, what is the hot option out there in UVIX today? It's the 24 halves expiring today. Interesting. Now in the money calls, going up about 4,400 times. Average price right around 28 cents, and they're probably worth about 28 cents right now. So kind of interesting. Also got the 25 halves expiring today, going up about 3,000 times. So a little bit of near-term call nibbles. We do see some of this action going up in UVIX. You mentioned the 4s, and in VX. A lot of these vol ETPs get a nice little shot in the arm on expiration Friday. Folks just love to nibble around the at the money and roll them bones in these products, Mr. Rhoads. Have you noticed that?
Oh, yeah. No, absolutely. And one of the funny things about that is when you have option traders that are, heavily involved in the day of expiration, sometimes what happens is if it starts rallying and you get some call buyers, it puts a cap on it because you've got the option market makers, selling the calls, and then they've got to buy some of the shares and et cetera. What happens is the pinning occurs because of all of the option market making that occurs in the last couple of hours leading up to the close. So I wonder if there's higher pin risk with some of these ETPs than there are with some other markets.
It wouldn't surprise me. I have noticed anecdotally, too, we are starting to see more intra-week pins, it seems like, in some of these names that do have a lot of the zero DTE flow going up. We see it on our hot options report throughout the week a lot. A lot of, let's say, 305s going up in Apple, and lo and behold, 304.99 out there, whatever the case may be. All these products here lighten up the tape. If you're not checking out the hot options report, make sure you're doing so, listeners. Mr. Rhoads, before we get into the crystal ball, you've got a couple of seconds. If you have any other vol products or trades or trends you want to hit on right now, have at it, sir. The floor is yours.
Oh my gosh, you're putting me on the spot. Not a whole lot. I thought we were going to really be stretched for things to talk about today. And then
the market gods heard our cry, so they delivered.
That'll be the last time I take a nap before class. Are you? I mean, I'm kind of shocked. If you really want to dig into something, I'm kind of shocked at the VVIX level.
Oh, I haven't checked it. It was 90. It was 96 at the start of the show. I haven't pulled it up since.
Well, with VIX doing what it's doing, I'm kind of surprised it's not over 100. It's around 95 right now, but I don't think there's a lot of panic going on around. I would feel like this is more of a panicky sell-off if VVIX were running up on us at the same time, which would indicate that we've got some demand for calls in front of what people think might be an extended move to the upside on VIX. Every move like this we've gotten on VIX, it's subsided right back down. So why would people even think about buying into it?
That's why I told your VIX call buyers in the weeklies, get out while the getting is good. Yeah. Now, what we need, Mr. Doctor, is that second leg sell-off, that second stage down in the second half of the session. That's what really sends vol into a tizzy and markets into a tailspin when we see that. Usually we see the sell-off, then it kind of mitigates in the second half of the session. If we don't see that mitigation, if we see another leg down, that's when I think, or if we open down size on Monday, that could also contribute to it. But it'll be interesting to see. But you know, it's also interesting, listeners, and or entertaining at the very least. Yep, it's the crystal ball. So let's get there next.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we all attempt to wrestle with the vol gods, see what's cooking out there. And as we're coming into the end of the show, we're seeing the Dow off a little over 0.75%, S&P off about 1.7%, the Nasdaq off about 2.9%. But as Dr. VIX alluded to, vol kind of retreating off of its highs from earlier in the show. VIX cash was at about a 19 when we kicked off the show, pretty much given up about a point of that now, hanging out right around an 18. Let's see, 1798, it looks like here. So, yeah, I'm looking here. I was the closest this week. I was at a 1635, so no joy for me, 1.63 away. But the closest, Mr. Meatball, oh, yes, I forgot. You two were on the dueling palindromic nonsense last week. Mr. Meatball was at his appropriate level of 1551, and Gretchen/Russell at a 1552. I think technically you were 155174 or something like that.
So something silly like that.
We had to round you up to 15.52. So alas, Mr. Rhoads, I've been playing the upside game for a little bit, but I was clearly not lofty enough in my prognostication, so I need to revisit my models. Nonetheless, I was the technical closest, so I can choose. And you know what? I will be a gentleman. I shall allow Miss Gretchen to go first. What's she feeling for this time next week?
Gretch says exactly 18. Since the theme was pen risk, Gretch says exactly 18.
Exactly. So
I'm not kidding. I'm not kidding.
She loves this same as we are right now kind of level. That's your model. All your analysis comes back to where is VIX right now.
It's usually, it falls pretty close if we're in the 16, 17, 18 range. You start to get some divergence when you get out of that range. I'll just leave it at that.
And I'm looking at where we topped out kind of today and looking for next week, I'm going to say a little bit more upside on the docket. I'm going to say a 1928. 1 year ahead of a pretty terrible year. All right, listeners, get your vol prognostications in now. If you get within a tenth of a point, unlike us this week, then you too can win fabulous prizes. All right, and that music means we have come to the end of our vol journey for this week. I thank all of you out there for joining us. If you are hanging out in the pro hangout, we'll be back in a few minutes to let loose the velvet rope. The bouncer will let you past. and we can all have some options oddities fun in the official after party of Volatility Views. If you want to get in there for next week, check out all the previous episodes. Of course, get some awesome exclusives. There is one thing that went live on the Pro feed this week that I literally cannot discuss, but it is pretty freaking cool. And you folks on the Pro are the only ones who are ever going to get it. So it's pretty cool. Of course, congrats to, Ghost Hunter, who won our Pro Trading Crate for this week. If you want to get all that fun stuff, plus live streams, plus, of course, awesome Pro Q&As like we just did with Dr. VIX and a whole bunch more. And, of course, Scott Nations before that and Tom Sosnoff the week before that, plus all the Pro stuff coming in from OIC and everything else. TheOptionsInsider.com/pro is the place to go to learn more. Mr. Rhoads, where should folks go if they want to learn more about you and Miss Gretchen?
Twitter, formerly known as X, or X, formerly known as Twitter. Just my full name, RUSSELLRHOADS.
There you go. You can check out his latest research as well. You won't get the deep dive. That was for our pro folks. But you can read it for yourselves if you want to check it out over there. It's linked on his Twitter, and we've retweeted it a few times as well. That's going to do it for us. Hope you had a great trading week. Hope you have a good weekend, listeners. If you are subscribed to the full network, you will get the Hot Options Report coming at you to wrap up your trading week. Is it a wild day out there in the options market? Well, we'll find out on the Hot Options Report. And then back again on Monday for some trivia battling on the option block. And then we're back all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.